Welcome, I'm Ernie Goss, research faculty member here at Fresno State University with the Craig School of Business, bringing you our survey results for the month of March. This is, of course, April 3rd, which is the first business day of April, and I'm reporting on what the businesses in the four-county area, the San Joaquin Valley, told us about the economy for the month of March. Well, how was it? Very good. The index was up above growth neutral for the 7th straight month. Now, growth neutral, the index ranges between 0 and 100. 50 is growth neutral. Above it for the 7th straight month. In fact, it's at a record high. This is the second record high we've recorded. We recorded for February, record high for March as well. 61.2 is the index, up from 60.2. That's a very strong number. Anything above, I would say in the range, anything above 55, I would put in the strong category. Inflation number, as you probably could guess, up as well. March number 68.1, up from February 63.5. Now that's still in the modest or moderate inflationary range, but getting a little high there. And what does that mean? It means higher interest rates when the Fed begins raising rates, or when investors begin raising interest rates on long-term treasuries and even short-term treasuries. Now here I'm going to bring up a chart. You'll see the index there. There's the U.S. plotted against San Joaquin Valley. San Joaquin Valley in red there, and you see the U.S. number. It'll come out later on this morning. That's the number for March for the U.S. I expect it to be up like the San Joaquin Valley number. It was and is up. The job gauge for March, 62.5 from 54.2 in February. Again, good numbers. The last 12 months, growth about 2.9% job growth. Now that's probably double what the U.S. is doing. That's obviously very good. Non-durable manufacturing, that'd be like food processing, doing great. Durables, not as good. Durables would be like metal manufacturing, heavy manufacturing. Now, approximately, we ask about hiring in the months ahead. 58.3% said they're going to be hiring. Now, is that good or bad? Well, that's double what we had last June when we asked that identical question. In other words, double the percentage of companies that will be hiring in the next 6 months. Now, what do you watch for? What should we all watch for in the months ahead? Actually, I'll talk about the next month, the end of May. The wage growth, BLS, Bureau of Labor Statistics, comes out with their number on April 7th. Now, the job number is in there as well, and that's the one that gets touted. But look at the wage number. When that number is getting too high, now too high, how can wages be too high? Well, we're economists. In the Federal Reserve, they're economists. They're looking for any early signs of inflation. That would be one of them, wage growth. And I'll talk about momentarily what are the risks, but anything above 3.5 is a signal there. CPI for March, that again comes out from the Bureau of Labor Statistics. That comes out April the 14th. Very important number. We're looking at the February number year over year. That's February of 2016 to February of 2017, 2.7%. Well, obviously that's above, I shouldn't say obviously, that's above the Fed's target rate. So the Fed's getting a little scared here, and that means they begin raising rates, so your interest rates will be going up. So when you go down to buy that automobile, you're going to pay a higher interest rate. When you, on the long-term side, mortgages, that doesn't necessarily mean you'll have to pay a higher rate there, but those could be rising as well. So on the short side, anything less than 5 years borrowing, you're going to pay higher interest rates. Look at a strange one. Keep an eye on the European elections, and that would be Germany, and that would be France. Two major elections coming up before the end of the third quarter. That's a big key. Those are key factors to look at. And now, what are the risks? What are the risks looking ahead? Headline inflation moving above 3%. Headline, I mean the total inflation number. That's not the one that excludes food and energy. The total and moving above 3%, that's a risk. Now, what is the risk for? Higher interest rates. And again, the Fed meets, they meet early in May. They could raise rates at that meeting early in May. What's another risk? Marine Le Pen. And a lot of folks are like, who the heck is Marine Le Pen? She's running for the presidency of France. If she's elected, wow. We think Donald Trump, President Trump, when he was elected, was a big surprise, a big mover. this is be an even bigger mover because she's promised to take France out of the EU. Obviously, Brexit, Britain exiting the EU was a big event. That was June the 23rd. This would be even bigger. And that will, again, April 23rd. Now, that's the first round of elections. Just because she wins that doesn't mean she becomes the president. But that would move markets, a big risk factor. Long-term interest rates will come down, believe it or not, because everybody's seeking a safe haven. Safe haven are our bonds. So watch out for that. Watch out for no tax reform, no corporate tax reform. I mean, the market's been moving. That's our market, whether it's the Dow, whether it's S&P, whether it's NASDAQ, moving up, 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 up. Now it's moving up because everybody, including me, has been counting on corporate tax reform. That's lower taxes. One of those is repatriation of earnings. That's bringing those earnings home. Big risk factor if it just all goes to hell in a handbasket or we don't get it. That would be a big risk factor. So, what's the outlook? Going ahead, putting it all together, healthy economic outlook going forward, higher inflation, we're going to see higher interest rates, but not significantly, so that's what we're looking at based upon the our March survey of businesses in the San Joaquin Valley. So, with that, folks, it was a very good survey. Looking ahead, I think we're going to still see pretty good growth for the San Joaquin Valley, and this is Ernie Goss here, research faculty member here at the Craig School of Business at Fresno State University saying, see you next month and may your economic cup runneth over.